Hey everyone, Sean Maloney, Digital Business Masters, another overview, all things strategy, all things blueprint. Okay, so if you're here live with us every week, you'll see both sections. The big overview, we look at the macro and geopolitical happenings of the prior week and what's coming up for this week. And in part two, we look at how we apply that understanding to front run bosses, banks and governments, which we've been doing now for most of the past decade. So if you're part of that, congratulations. If you're not yet, and this is new information, or you've seen crypto as a flash in the pan, then well done for waking up. Well done for taking it seriously. Now it's a case of putting the rubber on the road. So our job is to make sure that you are in a good position to do that. Hence, we set up an academy about 5 years ago, which is still going strong. We're very proud of it, and it's got a very strong global audience and very, very powerful, well experienced coaches. So we're very passionate about what we do, but what we're not here to do is give you any financial advice. Okay, that's your responsibility. You're a grown adult. We always talk about always seeking financial education. The days of seeking financial advice being given by people who have got a vested interest in leading you down a certain path that they don't fully understand themselves, but they're happy to take fees from you, those days are gone. Okay, the fiat system is not capable of upholding all those middlemen and all those hands reaching into your pocket. You've got to take responsibility for yourself, which is why we do what we do. And you'll hopefully understand more about that as we go through this next hour. So the main infographic we always use, I repeat this every week because there's people always coming through watching these videos and the content we do at DBM. What you don't want to be doing is spending longer than you have to at the top of this slide, converting energy and effort and skill directly into devaluing currency to buy liabilities. That's what you don't want to be doing. You may have been taught that by teachers and parents and bosses and banks and governments for most of your life, but you need to relearn, because what you really need to be doing is, yes, of course, getting out there and making a living. You've got to make a living. You've got to bring in income, but convert proportions of that income to assets that appreciate by the very definition that the income you're earning deflates in its purchasing power. Think about that. The stock markets, the property you're sat in right now, any number of different commodities, assets, pensions, whatever you can think of, the main reason that there's a perception of value inside those mechanisms has got nothing to do with the true value necessarily of what those companies' properties represent. It's more to do with the devaluing nature of the fiat currency that we use to purchase them. It takes more dollars, more pounds, more euros to buy the same thing, right? So we avoid those and we look for what are called accretive assets. Assets with fixed supply and unlimited demand. And there's only two assets on the planet that qualify for that as sound money as we sit in 2025. Everything else is deflationary. So the whole idea is to understand that, convert proportions of your effort and devaluing fiat currency into accretive assets, and then use the equity, and if you're good, the yield that gets created from that activity to fund liabilities. Just like you would on a balance sheet in a business. The trick is to learn how to run a business as well. Once you understand how business people operate, then you'll understand differences between good debt and bad debt, for example. Balance sheets and profit and loss accounts, cash flow forecasting, etc. These are all the things you need to learn, which is what we do a lot of work on inside the academy. So that's one thing, but to realize that is just that. It's just a realization. You then got to go and apply that to real life, right? There's no point being a perpetual student. There's no point having analysis paralysis. You've got to go out there and actually apply what it is and stay applied. So we find over the last decade, and in fact, I personally experienced this all the way through the last 3 decades, employing people in different businesses. You'll explain, you do your best to explain to people, and you'll do your best to give them the rails on which to take action, which aren't perfect. Nothing's perfect. You've got to realize it and then work on it and, take calculated risk and then learn how to manage the process, right? It's that management of the process that we found most people struggle with, which is exactly why most people stay 100% reliant on bosses, banks, and governments, or play the lottery, or look for a quick fix, because they're just not prepared to go through not just the process of realizing and learning what it is to be done, but also the fortitude and resilience it takes to make sure that you get to your goal. Because once you have these three pillars in place, you can expect challenges. You can expect things not to be easy. Of course, you're running a business. But particularly with Bitcoin, and a decade ago, we had the same experiences with Bitcoin that we now have with altcoins, for example. Oh, this is never going to happen. This is a joke. It's too expensive. It's this, that, and the other. It's all sorts. It's for drug runners, all these pieces of misinformation coming out because people just didn't appreciate the big picture of what sound money is. A decade later, it's becoming a mainstay in how not just individuals and companies operate, but entire nation states. In less than a decade, they can't beat it, so they're joining it. You've got exactly the same thing going on with what are called stable coins. They were seen as a joke currency for many, many, many years. Now, as I'll talk about shortly, they're fundamentally being seen as the savior of the US system. And lo and behold, in the altcoin space, just as we had with Bitcoin over a decade ago, oh, no, that can't be right. That's not right, Well, I guess we'll see, won't we? But just as we did, those of us with fortitude and understanding of resilience and awareness a decade ago, do you think we're happy that we've accumulated and stuck with it? And now we have balance sheets based on globally in demand assets built on a international balance sheet. Do you think we're happy we stuck with it? You find exactly the same thing going on when it comes to select altcoins. Select, right? Not all of them, select. So there's three levels: equity and yield. We obviously want both. We want a balance sheet and we also want a profit and loss account. In the altcoin markets, what we look for are both. We look for equity and yield combined. So we'll often own assets that we know appreciate in price because fixed supply and ongoing demand. We'll look for those in the first instance, but we'll also look for ways to stake and apply the same altcoin into different aspects of utility to create the yield as well. So it's all about equity and yield, but we're looking for easier and easier ways to do that as more and more and more people figure out what it is to be self-sovereign. So it's a lot to take in that. So what we did about 5 years ago, as I say, is we looked at what was going on across the space. We saw lots and lots of people getting excited that, oh, look, I can just buy Bitcoin and become a millionaire, or, oh, I can just go and get involved with that project because that marketer said it's going to be the best thing ever. People were piling into all sorts of different things, and that's okay. That's just the way life works. But we quickly realized that you're going to need some support around that, right? So we went and found the best communities we could, the best people we could, and we brought them together. And to this day, we operate a very sophisticated, very powerful academy system that's based on these 4 sections, if you will, covering 5 requirements: mindset, skills, systems, income, wealth. Okay. You've got to decide where you are yourself. Most people obviously want to jump all in. They want to get quick money. They want to get quick success. So they'll fly in anyway, right? But then they'll soon learn that you've got to step back a little bit. And if you're going to have the fortitude and resilience, you do need mindset and skills. Whether you like it or not, you need mindset and skills. And that is a big part of what we do at the beginning of this process. And we'll make it as affordable as we can. So notice that there's a few things going on here. The skills side of things, okay, if you're an existing skills subscriber, then shortly that will be up into $25, okay? So there's reasons for that because we're bringing behind it now some sophisticated roadmap. So we've got quite an in-depth 12-month course, for example, that everybody at skills level will be able to get into if they're at the $25 point. And at systems level, you get all the additional benefits of the hub, the hand-holding, the ongoing recordings, etc. So you've got a bit more value going on to systems. And at the income level, you can work with us one-to-one every day of the week. Okay, so that's the method here. I'll just draw your attention as well to the new DBM podcast that's now available. That's a free site, that's free to everybody. And its job is to try and break down into bite-sized 5-10-minute chunks a lot of the stuff we talk about on calls such as this. Okay, so hopefully you're finding all that useful, and we're very, very proud of everybody involved, because we all need to make a difference in our own lives and then help other people. Why are we so confident about this model and how it's been amazing for those who have stuck with it over the past 10 years? Well, because very early on we understood, like I say, the value of sound money. And it didn't take us long at all to start to realize that we needed to transition a proportion of our devaluing fiat currency into accretive assets such as Bitcoin and physical gold. We do a lot of that as well. And the whole idea is then to follow this vindication. This line is a vindication, knowing that we got to a certain point. Okay, we didn't know it was coming as quickly as it has come. And it's only really come as quickly as it has because of a major shift in political influence. But we'll take it, yeah? And it's now becoming almost, if you're listening to the mainstream media, and certainly if you're on the crypto channels, obviously across the internet, you'll see that it's becoming more and more and more normalized. So the institutions, the corporations, the big investors, the governments, yeah, they're all involved now. For years and years, we were fighting against that, right? Because it was idealist. It was, oh no, we don't want to be embroiled with all those people who have given us 100 years of pain since the Federal Reserve was incarnated, and through 2 world wars and through Bretton Woods and through the gold shock in 1971. If those people are capable of putting people through 100 years of pain and not flinching, why should we trust those people to come in and really make change? Well, we don't. But just like we did with physical gold and more recently with Bitcoin, we realized that we're in the center of the money supply, so it now doesn't matter what they do from an individual point of view. The problem now, of course, is getting this message out to as many people as possible, because the institutions, the bosses, banks and governments will not give you any breaks whatsoever. So that's not in their interests, right? They want everybody to stay at a certain level and do what they need to do inside the industrial complex. But those like us who do appreciate how to get closer and closer and closer to the central money supply, which is basically sound money, are able to revolutionize our lives. And in my humble opinion, the first thing you should do when you've achieved that is to help as many other people as possible to do the same. So we're at that point now. We're at that point right now. And so anybody with a proportional ownership of Bitcoin, we used to say back in the day, just own one Bitcoin, just own one Bitcoin. But if you've done that, then you're made for life. But now it's even if you've just got 0.1 Bitcoin, you can be made for life. And there's mathematical reasons behind that, which I'll show you in part 2, in terms of the DBM playbook to perpetuate a 0.1 Bitcoin into a life. Okay, so that's fascinating from past to present, but the future is even more interesting. And we'll touch on some of those very high level macro and geopolitical reasonings behind that over this next few minutes. As I say, you can catch it up in bite-sized chunks over at the podcast as well these days, because a lot of this information is very, very deep. Okay, I say to people all the time, or people say to me quite a lot, oh no, I don't want to get involved with geopolitics. I don't want to listen to him. I don't want to listen to her. I don't understand macroeconomics. It's not me. I don't understand it. Well, I'm afraid if you are going to move towards the center of money supply, and most of all manage it ad infinitum, you are going to have to pay attention, because it's in this detail that we are able to front run perpetually. We've done it for well over a decade, and now we're doing it faster and faster and faster, which is why I do these calls every week. Okay, so we break it down. There's a lot of macro stuff going on, such as big PayPal, payment giants such as PayPal now have enabled Bitcoin and crypto payments for all US-based merchants, which is the irony is not lost on us. So if you're in the US, then you're able now to interact very seamlessly with Bitcoin and crypto payments. It'll come to the rest of the world as soon as the rest of the world wakes up. Publicly traded Mara, 950 million. Okay, what's happening here is, I bring this up every week, is a lot of these companies and these institutions are recognizing the strategy model, for example, and realizing that if they've not got Bitcoin on their balance sheet, they're just treading water. There's no way for them to be able to get ahead. Now, in there, you've got two different churches. You've got companies doing that because they're going to attempt to build up a temporary value injection on their balance sheet and probably sell the company, right? And if you're a long-standing managing director or an owner of a company for the past 4 or 5 decades, then who could blame them? So we've got that tranche going on, and we've also got the treasury companies, right? The big companies that are doing it because they want to be embroiled within the monetary expansion over the next decades to come. Okay, from our point of view, it doesn't really matter as private individuals owning the center of the money supply, because it just means that more and more demand goes onto the asset that we own. That's the beauty of being involved with the 21 million asset in terms of issuance over this next 5 years in particularly, because we don't need much to build out a private balance sheet, right? It really doesn't take much. In fact, it takes about 0.1 Bitcoin. So all this demand energy that's happening because of the macro side and these companies, again, such as Interactive Brokers, another big brokerage. Yeah, you've got all these Hargreaves Lansdown and eToro and everything else. They're all now starting to allow crypto rails, as we call them, such as stable coins, and that just brings more and more and more liquidity into the rails. And as Robin did a call on this called the Trojan Horse, you'll see it over in the Systems Hub on the forum, and we also did a summary of it on the podcast that you can all listen to, talking about how the Trojan Horse is actually being devised here to make it only one click for people now to move from stablecoin rails to Bitcoin. And as more and more people understand what I've been talking about for the past 5 minutes, then more and more people will have and want to have ownership of a Bitcoin reserve of their own. And that is the fundamental part of the balance sheet that will change people's lives. And this is a phenomenal thing to even say, let alone think about. And it's happening because of all these macro activities. Tron, okay, $1 billion company, Tron, is now filed. Okay, so that means it's public, and we're now able to take the benefit of that. So those of you who are hodling Tron over the past few years, as we use a lot of Tron, obviously, in the systems we operate at DBM, well done. Well done. So they're now building up their own crypto treasury. Yeah, from nothing. Tron came from nothing. It was absolutely nothing only about 4 or 5 years ago. And it's coming around now to be one of the major muscles inside this whole ecosystem. So the altcoin treasuries are coming, right? So you've got Bitcoin treasuries. That's fine. I think we've discussed that ad infinitum over the past few months. And now you've got altcoin treasuries. So what we're doing now is we're looking at a careful reallocation towards what are basically, more, let's say, fiat affordable digital assets. Okay. And Tron is one of them, obviously. Ethereum is another. Yeah. So $425 million of Ethereum purchase through life sciences, for example. What these guys are doing is starting to put Ethereum on their treasury. Okay, big numbers. They'll make it the 5th largest ETH treasury company, overtaking BTCS. Okay, just this last week. So that's all happening in Ethereum, right? So this is the first time we've seen this happening at this rate. Okay, eToro. I mentioned those earlier. They're tokenizing the stock market based on Ethereum. So what you're looking at there is Ethereum starting to become the backbone to the TradFi system. The backbone of the traditional finance system is obviously the stock market, right? And the stock market will keep doing what they're doing. They're going to keep taking advantage of people and being middlemen and keep taking fees, but they're not stupid. They're going to do that more efficiently using blockchain smart contracts on Ethereum rails, because then the cost of them doing their business is going to be much lower. Doesn't mean they're going to pass that on in terms of fees. And your financial advisor or pension planner probably doesn't even know what I've just said there yet. So they're going to keep taking their fees in blissful ignorance or complicity. as time passes. This is where you've got to be financially educated and not just be advised, because all these things are going on in the background. And it's not just a case of you understanding it so that you can put some pressure on your brokerage or your financial advisor to reduce your fees. No, what you need to be doing is bypassing them completely and owning the assets that appreciate in value because of this technological shift. So Bitcoin's already done it and doing it more and more and more. And you've got Ethereum, you've got Cardano, you've got Solana, you've got Tron, etc. Yeah, we've said forever, have in your portfolio a proportion of all the top 10 digital assets on CoinMarketCap, for example. We've said that for many, many, many years. Not because we necessarily knew this was going to happen, but we had a good idea that eventually the technology of blockchain would become irresistible for companies looking to reduce their own cost base, but not necessarily pass that on to their clients. So you don't need to worry about that now, because you can own the fundamental asset that they're running on anyway, which is what we've seen with Bitcoin over the past 10 years, right? And then Samsung. So then you're into big companies that have big individual reach. Samsung, obviously, through their mobile phone structures. Yeah. Multi-trillion-dollar Samsung. They have 150 million users worldwide, have now added Bitcoin and crypto payments to their platforms just last week. It's only a matter of time for ordinary people to see these apps and buttons and functions appear on the devices that they're still using to share pictures of their tea or dogs. Eventually, they're going to realize that you need to use those devices as an income to your life. And that's happening. Our job is to front run that and be in front of the assets that all these people are going to use. And in the second part of this session today, I'll show you how we're already doing that in the gaming industry, and the sports industry, and the trading industry, etc. We're well, way, way, way ahead, because we recognized this years ago. Part 2 of the macroeconomic section. On the right-hand side here, just an interesting little thing I spotted in the week. What price does Bitcoin flip the Mag 7 and gold? So keep an eye on this. Yeah, keep an eye on this. You can see the prices. We've already flipped Google. It's very close now to flipping Apple. It won't take us long then to flip Microsoft, Nvidia, probably by early next year. And then they reckon gold, well, gold, who knows? Anywhere from 2027 to 2030. Yeah, $1 million Bitcoin. Okay, so think about that. Think about that. And if you were really clever and you were listening to what we were talking about over the past 5 years at DBM about owning a Nvidia stock, then you win-win-win. If you're accumulating gold, you're a win-win-win on top of the Bitcoin. That's the point. You need to set up your own treasury, your own balance sheet, your own version of what it is to be your own boss and be self-sovereign. That is it in action there. Now, does it mean you have to run out and suddenly start buying up this stock? No, of course not. You missed that boat probably. You need to start thinking about other things. But the Mag 7 is the Mag 7 and gold is gold. So it is what it is. And that's why we dollar cost average, right? Constantly adding in. We don't, just hope for things to happen over the next 20, 30, 40 years because we're dutifully putting funds into a pension plan and having a 6 monthly statement saying, well, hopefully we expect your pension to be worth this by the time you're 80. And with a bit of luck, small print, small print, small print, small print, they're just taking the mickey. All the funds are being taken on the way in, right? All the fees, etc., being taken on the way in. So the whole idea is for you to circumvent that by understanding what's really going on with especially sound money. JP Morgan and Coinbase are partnering to make it easier for customers to move between traditional world and crypto native systems. So for the longest time, JP Morgan were nothing but trouble in terms of the perception they were giving to the common person. We knew behind the scenes what they were doing, just like we've always known what they've done with gold. Behind the scenes, they were accruing Bitcoin while telling the world that it's for drug runners and Silk Road. This is the disingenuous nature that is unforgivable for these companies that have been around for hundreds of years, don't forget. And then Coinbase comes along and does a great job being like the mediator there yeah, to say, no, come on, we can sort you out. And lo and behold, as soon as the American government says jump, the likes of JP Morgan are saying, well, how high? And off they go, right? It's becoming normalized. Something that isn't normal, but in fact, it's very, very extraordinary, is what strategy are doing. Prior not called MicroStrategy, so you know, Mike Saylor's company. If you want to know more detail about this, then go to the DBM podcast and have a listen to the strategy earnings call summary we did from last Thursday. Very, very interesting indeed. And of course, what are we doing? As we'll talk about in part 2, we're already well entrenched in owning strategy stock through MSTR. Plus, the myriad of other preferred stocks that those guys have set up, particularly what he calls the iPhone moment for that particular initiative, which is us owning Stretch, because that gives us a yield. Remember, it's all about building equity plus yield. You live from the yield, a proportion of the yield at least. You put most of it back into your balance sheet to grow your asset base, to use equity to fund more yield, obviously, like you would in any business. And that MicroStrategy system is perfectly poised for that to be the case for people to take advantage of as individuals, all backed by sound money directly. No middlemen. That's why they're frightening the system to death. And it's exactly why a lot of companies are jumping in now and building Bitcoin in their own treasury reserves, because not only are they seeing the model, they're also getting the green light from government, especially with first fair value accounting that came out in January. Okay, which has been the best thing that's happened overall, if you think about it. Now, another big topic we touched on last week, and we did a podcast summary of this, so it saves me going through some quite technical detail on a call like this. So get over to the podcast. But we're interested in observing now the way that Bitcoin is acting as a liquidity sponge. What's basically going to happen is, we'll touch on it more in the political section, but they've got a big debt problem in the US. In fact, they've got a big debt problem in the world, right? But the US is spearheading it. They're going with a Hail Mary, as they call it, and they're looking for ways to purchase at great speed up to $3.7 trillion worth of US debt through treasuries, okay, to buy treasuries, because that's where they reckon they could take it with the stable coins. Now, normally that would create a lot of inflation, right? Because they're just moving huge amount of printing currency, right? Basically, printing currency. But they're doing it through the stablecoin rails, which is akin to CBDCs. But with Bitcoin in the background, which is part of what the next phase is, Bitcoin will inevitably absorb a lot of that liquidity. And it will put a huge demand side pressure on Bitcoin, which will take Bitcoin's price up. And the US obviously own a lot of Bitcoin, so therefore they're going to try and balance out the books, as it were. Okay, now we know that now. We're observing it so closely that it has a net effect on our balance sheets, on our treasuries as individuals. That's why we're closer to the money supply. So as the governments do things and we're watching them ahead of time, doing it in real time, and we're doing it as well, then we are able to be as powerful as the US government, but in our own little way, right? That's what's happening there with Bitcoin acting as a liquidity sponge. And it's been helped along by the SEC, no less, with Paul Atkins now in place. Just last Friday, he was a long speech he did, encouraging people to be in self-custody. You'll have known for a long time at DBM, we speak about self-custody. We've always spoken about self-custody because, in case it isn't obvious, if you don't hold it, you don't own it, right? Obviously, we understand, as I'll talk about in part 2, how we allocate proportions of our balance sheet into other companies, giving them custody, because if you don't do that, you're not going to get the benefit of what that company represents, be it in yield, be it in trading, be it as collateral, whatever. But you've got to hold both. So Paul Atkins there is openly encouraging people to understand the project crypto that's going on, that we're basically spearheading and have spearheaded well ahead of Paul Atkins or Donald Trump or anybody else. Even we were doing this even ahead of Michael Saylor. And now the model is coming into pure focus because all the momentum being created by these big influential people is having a net beneficial effect onto our little old us balance sheets. Even in the UK, thankfully, the UK did the right thing a few years ago and got out of the mess that is the bureaucratic European Union experiment. But even so, big part of the reason that happened is because of the City of London. Still, if not then one of the major, obviously, financial centres of the globe. So they have a lot of influence on the FCA, which is the equivalent to the SEC in the UK, and they're flexing their muscles and saying, look, guys, we can't be left behind here. An ex-Chancellor of the Exchequer in the UK just this morning was saying the same thing on mainstream media. Come on, sort it out. Sort it out. We're going to get left behind. You can see how fast the big economies of the world are moving. It's a case of making sure UK, you mean the City of London, but the UK gets affected as these changes and improvements get approved, and that's what's happened just last week. So that's great news for the UK. What's happening in Europe is anyone's guess. You've got no management going on there whatsoever. You've got bureaucrats who are grandmas, and it's a shame because they're just going to kill the system completely in all sorts of ways, not just economically, but that's just my opinion. And then last but not least, strategy expected to buy $4.2 billion. So that's the biggest purchase ever there, effective immediately. Okay, that's over 35,000 Bitcoin, right? So again, these people arguing and discussing about the overprice of Master, give me a break. How is MSTR overpriced when they're buying Bitcoin at that rate? It's just a cold spring. It's a cold spring. It's just obvious, right? So you make your own minds up, do what you need to do. We're not here to give you any advice, but it's pretty obvious. If you're going to diversify into, non-custody Bitcoin through master stock, etc., if that's part of your thinking in your strategic portfolio, which is fine. No, not everybody wants the responsibility of holding their own Bitcoin. Of course they don't. That's okay. But just as we've said over all these years, you've just got to track the pyramid. That's all you've got to do. Right? Like we did with NVIDIA. We knew NVIDIA was going to go up because we knew it was going to take more and more and more processing power to go into AI and go into more Bitcoin mining. It was obvious. We knew that. So we bought NVIDIA. Okay, that's the bottom of the pyramid, and the middle bit. And then the top bit is obviously always sound money. That's exactly what strategy has done, and that's what we've done for many, many years now. So you make your own minds up, guys, but these are all strategic thoughts. Yeah, strategic thoughts. That's all they are. So last but not least, on the geopolitical level, Dubai now is open to crypto derivatives, okay, through OKX. So you've got perpetual 5x leverage going on now through Dubai. We've said before, and I'll keep saying it, that the Middle East is looking for those big liquidity pools, okay? It's looking to make its own way now. For years and years and years, obviously from the oil point of view, it was used by the West, and a lot of wealth was pulled out of those countries into the stock markets of the West, okay? But that's now flipping the other way, basically, yeah? So that's why you're seeing Saudi Arabia and all these countries. Needs to be sorted out over, obviously, there's some of the more hotspot areas, but notwithstanding, it'll all level out. Whether it's in our lifetimes or not, it doesn't really matter. What matters is the fact that this is happening, and we have the ability to be nomadic these days. So we're no longer, there's a podcast coming out later this week talking about this, called The Sovereign Man. And it's about how we have now the ability as individuals ourselves, if you get enough power base underneath you with all the things I've been talking about, you're not beholden to any jurisdiction or any country. Yeah. We can move wherever we want to move with 24 seed words in our heads. And this is what's happening in these hotspots around the world. And Dubai is one of the main front runners of that, obviously. Now, the US know this is going on, right? And there's a lot of migration, a lot of movement of big wealth moving out, because the big countries, especially in Europe, are just on their last legs when it comes to funding unaffordable welfare systems that have basically failed. So a lot of them are going to be privatized over the next few years. But in terms of the fight back, if you want to call it that, then you are going to find bills and laws coming in that allow the wealthy again to keep moving money back into the system, right? And one way that's done, of course, is to be able to use digital assets through Freddie Mae, Fannie Mac, or whatever it's called in your country, in order to underpin borrowing, such as mortgages. Okay, so crypto is becoming real world collateral, basically, which we've known about for a long time, but it's now becoming more formal in the big structures of the money markets, which just bring more liquidity into Bitcoin, and off we go. On top of that, the SEC last week just flipped the switch on the Bitcoin ETFs. Okay, so now do in-kind creations and redemptions are now coming through. So there's no more cash workarounds. It's all in Bitcoin, real Bitcoin. Okay, so all the Wall Street flows are coming in now as well. So this is a big deal. These are big deals. And it's all designed to keep the money. Okay, they know how fluid we are now. So we don't need to be beholden to any boss bank or government. So they're going to give us all these incentives to stay put. Right? And this is what's happening when they flip switches, such as ETFs, and open up Wall Street, etc. Okay, but don't expect them to do any favors. They're still going to do the same things they've always done. But this time around, you can front run it by owning the very asset at the very beginning that they're working off. You're not getting the scraps at the end. You remember we talk about the concentric circles, living on the edge of the money supply? You're not there anymore. If you own Bitcoin, you're in the middle. The crypto report dropped last week. This is, again, the US government looking to accelerate their prowess in this entire industry, which just a year ago would have been a complete anathema. But middle of 2025, here we are talking about crypto reports and Bitcoin reserves. Now, there was nothing specific about the Bitcoin reserve, notably, in that crypto report last week. But they were quick to come out. Bo Hines was quick to come out after the issuance to say, oh, no, hang on, this is going to take longer for us to get right. We're not going to rush it. Okay, so give us a chance to put it together and finish off the edges and everything else. But there's no question that Bitcoin is heading towards the balance sheet of the US for the reasons I mentioned earlier when it comes to the Hail Mary of attempting to use Bitcoin to cover a lot of the US debt. Yeah, they're going to do it through treasuries, of course. So it's just a matter of time. It's just a matter of time, which gives us lots to be pleased about, actually, because we're going to need some people, well, all of us, we want time to accrue, right? We want time to accumulate. You're listening to this for the first time, or you've been listening to this for a year or so, and you've just not been able to get to that, say, 0.1 Bitcoin. You want more time, don't you? You want more time. The Bitcoin being at relatively low prices compared to where it's going to be over the next 5 years. So that's okay. Think of it like that. Think of it as a blessing every time you see a dip. Think of ways you're going to protect your balance sheet. Do whatever it takes to save your way into being able to afford more Bitcoin or bring more income into your life to accumulate more Bitcoin. You're building a balance sheet. You're doing it in a very quick way on a globally connected interface. Never forget that. And then, of course, the big ones that are now coming, and I suspect this is what's going to happen across Europe as well. You've already got it in Malta and Cyprus and other places in the EU. It'll come to the UK shortly, I suspect, but it's definitely going to happen in the US, where they'll be looking at the removal of capital gains on small Bitcoin transactions, right? Small Bitcoin ownerships. Yeah, think about that. That's when the masses will come, of course. Now, we're not seeing much retail in this cycle yet. Bitcoin being up over 100,000 is mainly being driven by institution, okay? And they're obviously managing it now much more. They control it. And that's okay, because it means we're not going to get as many winters as we used to get. We just want steady growth over time. We're looking at hopefully 30 to 50% CAGR. But what we do expect to happen in the next few months, maybe, as they bring out more information and the masses latch onto it, or at least the advisors of the masses latch onto it, such as the removal of capital gains, then the masses will come. And that's when you'll see a big spike. You'll then see a pullback as we go into 2026. But that's okay, because we know how to manage that on our balance sheet. We'll talk about it in part 2. All right, so we see it. We see it. The US government is using the institutions, Wall Street, to front run Bitcoin as high as they can, okay, or as high as they want to, because this will require equal amounts of stable coin in order to balance things out, like I say, which means treasury purchases, aka printed money, US debt. So we're going to watch this play out. We're just going to ride up the price as we go. And tomorrow, on the podcast, you'll see the second part of the two-part series. The first one was released today, talking about this. It breaks it down into two sections, and tomorrow's section is about the money, the maths behind it, the actual mathematics behind how we can see a Bitcoin price anywhere from 600,000 to 1.4 million in this cycle. And there's mathematics behind it because we understand the size of the US debt, the amount of treasuries they want to absorb into stable coins, and the direct effects of that mathematically on Bitcoin. It's not a difficult thing to calculate. So because we've got those pieces of information now, and it's all coming to us streaming across, the US government having no problem giving us this information. If you think about it, over your lifetime, how much of this information have you ever understood or known about from your governments or your bosses or your banks? Now it's all there because of the communication age. This is the clever bit about using your devices, using your Wi-Fi, using your time to be able to understand, educate yourself, and get ahead. And then to cap it all off, just yesterday, they've shortlisted the next chair of the Federal Reserve. Right? So it's probable we're going to see it's almost twee now. I mean, it used to be quite a major thing when we were looking at this back in the day of, oh no, when are they going to adjust interest rates? And when we had a field day with it up till COVID, right? And then post-COVID, everything changed because they needed to get back out there and supposedly manage the economy, but they've not done since Bretton Woods. But now we're looking at an interest rate change in mainly the Fed. Yeah, that's what influences everything that we do in Bitcoin. And that's going to happen in September. All right, with or without this politicized Fed chair we've currently got. But it doesn't really matter because he's out anyway shortly in May at the latest. So keep your eye on that. And again, we're just front running it because we talk about this once a week. That's what this calls for. So to wrap it up, as a reminder, a lot to take in. I'd encourage you to get across to the podcast. You can break down all these pieces of information into chunks. Hopefully it's helping people understand it a little bit more and get prepared. And then if you're really serious about making sure that you're going through the steps and you've got your security organized, your wallet management, your exchanges, all the things you need to be doing, your security, make sure that you're working through the gears here. And ultimately what we get to, as I'll talk about now in part 2, is how to pull together a blueprint on which you're able to constantly balance your asset base against income and just constantly work them off each other so that your income is perpetual and your asset base constantly grows. That's the whole idea of running a digital business. Hopefully that was useful. See you on the next call.